Hey guys, thanks for joining us here in the charts. It is the market beast, Napoleon macro. I wanted to stop in as many are, I guess, panicking out there, selling. A lot of sell pressure in the market. I just want to stop in and let everyone know that we are currently looking at an opportunity. And I'll let you know where that opportunity lies, whether it's to the upside or the downside here in this video by taking a look at the weekly candles. We also have a special guest with us, an indicator that I was able to save on the tradingview.com platform that I'd like to show you. A signal just came in. That's pretty interesting. We're going to explore that. And yeah, we're going to do that in hopefully a short video. So let's do it, guys. Welcome back, loyal family. If you're new here, we only explore price action. Thanks for sticking around, my loyal subscribers. Let's go ahead and dive right into the charts here, shall we? So today's December the 16th, 2022, and the current price of Dow Jones is going to be $32,943.17, fluctuating slightly negative 0.6% for the day. Okay. All right. So many of you have been with us for some time, and to the average eye, it looks like the markets are going down, and but to the keen eye, the ones who have been following us closely, I think you know that it appears that a buy-in opportunity is a brewing here. So here's the chart. All right, so let me just go ahead and let you guys know what you're looking at here. All right, so we're looking at the price, again, weekly candles. And here's the special guest with us, the RSI down at the lower portion of your screen. This is actually a part of an indicator that I saved. This indicator is no longer available. It's a divergence on the RSI, believe it or not, down here. And the little circles that you're seeing is has only happened twice. I'm taking a look at the 8cap brokers setup here. This price action is from 8cap. So we have data that dates all the way back to about December 2008. Okay, so that's as much data that I have. But if you notice on the lower portion of the screen, this little bull, you see that little slash and a bull? That's actually a indication that there is a bullish divergence with the RSI and the price. And the last time this actually happened was back in like August-ish, 2015. If you're noticing the price action as well, I put this little nifty line on the price where it says divergence. Excuse me. So this is, of course, where things started to get really, there's an imbalance in the market where the buyers started to buy up the market here in about January 2016. Okay, so let's just let you guys, I want to let you guys know that there's only three things that you're going to look for in order to understand whether or not the bulls will prevail. I specifically wanted to stop in on a slightly negative day because, again, guys, I'm never on a bandwagon. Okay. First thing, all right, we need a bullish divergence, number one, and I have the W there in quotation or parentheses because we're going to look for a bullish divergence on the weekly, and we do have that here in 2015. All right, yeah, about August 2015. So that's number one. Number two, we're just going to need a revisit of the highs. Let's see if I can pull that over here. Revisit of the highs, okay, for number two. Okay, again, let's reference here 2015 first before we go over to present day. And basically what that means is number one, you get the divergence, right? And then you have to revisit the previous highs, which is here. So, of course, you can see back in 2015, 16-ish, that was accomplished on the price, okay? And, of course, number three, last but not least, this isn't guaranteed to play out exactly, but at least we have something to reference it to and find a level of interest. Number three, 0.382 Fibonacci level will hold as support. And the only thing I did to pull up this Fibonacci retracement level, let me just erase it and let you guys know. I just basically started from the lows of the price over here, and then I just kind of measured it out to extend to the high here, okay? Because virtually speaking, like it would basically look something like this if we were just kind of like say that this price action was present day. So the way that you measure your fib is, you know, the active participation that is going on in the market now. It would look something like this. Okay, so you measure from the low and then measure from the high. Hopefully that wasn't too long and drawn out. Okay. All right. So basically, so let's go ahead and do that and get back to where we were. Pardon the lag there. All right. So here we are, present day. And well, not present day, 2015 to 2016 ish. Let's pull out the fib, start from the low, measure it on up to the high right there. Okay, so we have the 0.3 1.82 level. Looks like the market actually opened below that yellow line. And of course, as you can see in hindsight here, it just took off to the upside. All right, so those are the three things that we're going to look for on present day's price action to see if we can get a move of this magnitude. By the way, guys, I'm going to leave a link in the video, hopefully right now. I'm not sure if I was one of the only YouTube channels, but I think about at least a month ago or so, we were referencing that the Dow Jones can go up to $34,000. We recognized some big boy buy orders at that level, and we said that the market will not go down until those orders were fulfilled, and that is exactly what happened. As I continue to prolong and procrastinate as I get over here, that's exactly what happened, guys. I think we made that call at about $31,000, and it went exactly up to $34,000, and it's coming down now. Okay. So again, 1 through 3, let's wrap things up here. The bulls will prevail if, of course, we have that bullish divergence on the weekly. We have that, number 1, for check mark for number 1. Number 2, we do have a revisit of the previous highs, which is here. So we got a check mark for number 1 and number 2. So right now we're pending number 3. And it looks like so far there is a small reaction at that level at about $32,557.68 precisely. That's where I would be looking to potentially find some sort of support here, whether it's going to take 1 week to turn things around or a few weeks, guys. This is the only level that I'll be looking at approximately. Take notes, guys, $32,550-ish. Okay, so let's see if history will repeat. This is a very rare signal. This divergence, whenever you get a bullish divergence on the weekly, guys, on any asset, you might want to take a closer look at that asset, okay, on the weekly or higher, okay. So that's all the information. I think we pretty much wrap things up. There's one last thing is hopefully this video will actually age well, because if it's not aging well, I actually have an update that I would like to give you guys just in case it doesn't age well, because I'm noticing something in comparison to these weekly candles here. We're approaching the close on this weekly candle, by the way, this candle right here. It's going to close in about 1 hour and 7 minutes. And what I'm looking at, we'll close things out here, guys. What I'm looking at is, you see how this candle is, so far it appears that it wants to, okay, it will when it actually closes, like we'll know, but it's somewhat similar to this candle right here. The reason I'm pointing that out is because the large wick above the candle's body does make me raise an eyebrow as to whether or not we are setting up for the markets to move higher. My price target is not going to change, guys. One of two things is going to happen here, okay? The market will revisit the highs, or it's going to make new highs next year, okay? I'm not predicting a crash, guys. I know people are still waiting for a crash, all right? The market will crash when it's ready to crash. You have to respect the trend, okay? The trend is to the upside. Overall, this market is in an uptrend, okay? It's only been going down for the past, for the majority of 2022. 2022 started right here, all right, in about January, okay? The market was continuously making lower lows, lower highs, lower lows, lower highs, lower lows, until it has recovered most of all of the market, the bleeding out, so to speak, in the market in 2020. Mostly all of that has been recovered. So please, guys, please understand, if you're out there shorting the market, know what you're doing, okay? I'm not predicting a market crash. I'm predicting a rip to the upside, with the exception of a few levels. Right now, we've just discussed the 32,550 level. That's where we're going to start. We do have a few Fibonacci levels just below it, but let's keep it simple. All right, $32,550. Let's keep it right there for now. Let next week play out. I'll keep a close eye on these two weekly candles to see if we need to make a video update. You know, I look at this to kind of determine the overall markets. I know you guys have stocks you want me to look at. I apologize. I'm not going to be looking at those stocks, guys. We're going to focus on the big boy stocks. All right, for now, until we get out of this, murky water. Okay. So let's see if the bulls will prevail. All right. And see if we can get a check mark for number 3. There's a question mark here for number 3. All right. Because I'm not sure what's going to happen. But now we have something to reference to. Okay. So that is the end of this video. Hopefully you enjoyed that. Hopefully this wasn't too long. So we'll wrap it up here, guys. So if you don't mind doing me a huge favor before you go, by simply leaving an appropriate thumb, I'd appreciate it. And also leave a comment so that the YouTube algorithm can promote this video on the channel. Thank you for your continued support. Also, if you're new, we explored the alternative markets, if you're into that. So you can kind of join us here on this interesting journey. And we'll send that out to you momentarily. Welcome in. I'd like to take this opportunity to thank you all for your time. Remember to always have a strategy before you enter the market, okay? And keep that positive energy flowing. We'll talk soon, and bye for now, guys and gals.